What's up, everyone? Hopefully, y'all are having a good Tuesday. Today is the 6th. Please press 1 in the chat if y'all can hear me. Let me just make sure that everything else is working. Press 1 in the chat if y'all can hear me, and we'll get started today. One? Okay. Thank you, Thomas. All right. So, not really much news coming out over the night. So, markets are pretty flat so far this morning. Basically unchanged with SPY up 0.04%. So, not really much to go by, but as you saw in the title of this live stream, the dollar is beginning to rise a little bit. So if we look at UUP, which is the way that I like to measure the dollar, it's a derivative of the dollar actually, so it's not, hand in hand with the dollar, but you can type in the ticker UUP and you'll come up with this. So basically we're at the same heights that we were after the employment data came out last Friday, which showed that wages were rising very quickly. If I remember correctly, it was 0.7% month over month and like 5.5% year over year. We can double check the numbers on the econ calendar. I will link this in the live chat for everybody. Hi, Eric. Good morning. So that's the econ calendar that I like to use, and we're gonna pull out the time machine and we're actually gonna go back to Friday the 2nd. So we had 3.7 unemployment rate, which is just what was forecasted and what was the previous month, so no change there. But then the average hourly earnings is what kind of spooked the market. So it's 5.1% year over year, and the monthly reading was 0.6% versus 0.3 expected. So wages are going up a lot quicker than what Wall Street had anticipated, and that means that the Fed has more work to do in bringing down the number of current job openings so people can negotiate higher and higher wages quicker than they would otherwise if we had a tighter job market where there was, I think right now there's 1.5 jobs available to every one person that's unemployed. It was up to 2 at one point. But once you get back to more of an equilibrium, like 1-to-1, then people can't just, go job hopping. They can't ask for much higher raises. So that's what the Fed wants. They want to slow down the, supply of jobs, I guess, the people that are offering them. Yeah. So that is kind of what's moving the market, the dollar mostly. And partly the reason behind this, I would think, is China possibly reopening. I say possibly because, you can't really trust what comes out of China, obviously. The data did show that their COVID cases were slowing down. So potentially, if the Chinese economy starts to come back, that'll alleviate some of the supply issues that we have, which means that the Fed doesn't have to raise rates as much. But if they do, go back into lockdowns again, then that would slow down the supply chain. We have a lot more demand than we have supply right now, so that's just going to exacerbate the inflation that we're experiencing, which means that the dollar has to go up whenever rates go up. So that's kind of what's going on this morning. So that's the UUP. That's probably the main focus of today's market because we don't have any econ data. We don't have any Fed speakers today. Let me see what other news we might have. So we did have import exports. I think there was a wider gap. I think there's more imports, so more supplies coming in. Let me check on that actually. So today, this actually came out this morning at 8:30. So the exports, the amount that we're shipping out was only 256. The amount that's coming in was 334. So this gap is widening from 258 and 331 last month, I'm assuming. I'm not sure if this is a monthly reading or if this is a quarterly. But that, not good for the the dollar strength. You want to see more exports in order for the dollar to go up. That means that people are paying more for U.S. goods, which helps out the U.S. dollar basically. So that might be actually the reason why we're seeing the dollar climbing. Well, I guess if it's widening, that would actually bring the dollar down, I would think. But for some reason, we're seeing the inverse correlation. So anyway, let's go back to the live stream. Good morning, Lido. Good morning from the chat box. Good morning, C-Night. All right, so let's go check out SPY. Again, I don't think we're going to make any big moves. So this is what I posted in the Discord in the morning market update that I give. Well, I try to give every morning. I didn't do it yesterday because I was working on the watch list. But markets are off to a slow start, unchanged. Today through Thursday is likely to be flat because we don't have any new economic news, but this is barring any escalations that we have with Russia, which usually sends the market down, or any more China lockdown news. So if the lockdowns kind of subside, that would probably cause the markets to go up. If the lockdowns, get worse, that would cause the markets to likely go down. And then the one thing that could move the markets is the dollar, which we're focused on today. This rose to where it was last Friday. And then we have the Fed meeting next week where we're expecting a lot of volatility because typically what happens is the markets get overly excited in the few weeks going into the Fed meeting, and then the Fed meeting happens and the Fed ends up basically rug pulling the market every time. I don't expect this one to be any different because we have the summary of economic projections. So even if we get 50 basis point rate hike for December, we're still likely to go down. And I opened a trade on this idea yesterday, and that one I was actually profiting already. Pretty decent amount. I'm up 62 this morning. The account's at 37,200. We'll go over the trades that I made yesterday in a second, but I opened this 399, 398 put debit spread, assuming that it's going to be below 398 on 12/16. Yesterday, SPY was trading at, let's see, I think it was like 4:03 whenever I opened this. Yeah, it was sometime around like 9 in the morning. So it's trading around 4:02, 4:03. I opened this put debit spread, assuming that it would go below 398. For the Fed meeting based on the 410 top that we experienced, I think, last week, and assuming a 3% drop from that 410 high. So I would say this is a pretty conservative estimate, especially given that we're already trading at 399. So I would say there's probably around an 80% chance as of right now that this trade is going to work out. Right now, these are going for, I think, 45 cents a piece. So not too late to get in, but do keep in mind that I ended up buying these at 38 cents and not 45. So that means that I get, extra 20% leverage out of this trade if you're opening it right now. So yeah, but SPY not really moving a lot. I think I'm going to open an iron condor. I think that's probably the best move for today. And let's figure out our strike prices for that. So I do think that there's a chance that we go below 399 just because of the dollar rising. So I do want to play it safe for the downside and go a little bit lower. I'm going to pull out the 1 hour chart and maybe we go by this candle of significance right here. Sorry, my computer is being stupid slow, but this one right here started at 394.22. Feeling extra poor today. Closed at 399.72. Divide that by 2 and your average is 396.97. Okay, so that's down here. Basically 397. I will call it 396 just to keep it safe. 396.97 though. And we're gonna open an iron condor, assuming that it's gonna be above that level. Now for the upside, let's see. So we're gonna assume that it'll be above 396 with a put credit spread, and then for the upside, I would probably go with 403, maybe 404, but I think the odds of it going above 404, unless there's any crazy news that comes out, is pretty low. So we're gonna do a 404, 396 iron condor. So we'll set this up right here. So we're going to go to the option chain. This is going to be a day trade that expires today. You could also extend the expiration date to, Wednesday, tomorrow. Just because there's no big economic news that's coming out between today and tomorrow that I know of. Let me just double check that. Econ calendar. Tomorrow, I'm pretty sure I didn't have anything major on the watch list this week, but always good to double check. Crude inventories, I don't think that's going to move the markets. Non-farm productivity could have some impact on the market, but I don't think it's going to be that much. So you could either do today or tomorrow's expiration date. Tomorrow, obviously, you'll get more credit for it because there's more room for the stock market to move in 2 days versus 1 day. But I'm gonna do again that 396. So we're gonna start with a 396 put. We're gonna sell that to open it, assuming that SPY will be above 396. We're going to buy the 395 because we don't have $39,600 of cash to buy 100 shares of SPY because I am a poor man. And then I'm going to sell the 404 call because I don't have 100, or I'm going to sell the 404 call assuming that it's going to be below 404, buy the 405 because I don't have 100 shares of SPY. Again, a poor man. And the bid-ask spread is 10 and 14, so you're not getting much credit for this trade. Not exactly the best setup in terms of risk-reward. So what we can do is we can decrease the width of it, so we could go 403, 397, but of course you are taking on more risk accordingly with closer strike prices. So let's try that. See if the risk-reward ratio is good enough for that added risk of having a tighter spread. 397, 396. So you get 21 in credit. That's a decent amount of credit. I would probably want like 24, 25 from this trade, which is where the ask is. So you're unlikely to get that amount. But let's see. Let's set up some more price levels to go off of. So we want to probably close if it goes above 402.04. At or above 402.04. This will be an alert. Nice thing about Thinkorswim is it'll text you whenever you get in a... That is not the right freaking mark. Nice thing about Thinkorswim, though, is that it will text you whenever you get an alert. What the heck, man? 402.04, please. That is what I want. I think maybe actually we go down more than we go up today. So I would, again, be hesitant with a 397 strike price. So I think I might just open a call credit spread instead of having an iron condor for today. Maybe we open a call credit spread today and then a iron condor for tomorrow. So we have 1 day trade, 1 swing trade, and they'll kind of balance out at least a little bit. If one starts going poorly, the other one might perform a little bit better. But let's reset this up one more time and then So I think we're going to stay below 402, maybe 403 if we want to be safe. If we do the 403, sell the 403, buy the 404, we get 6 credits, so hardly anything, not really worth the risk reward. And then if we do 402, 403, we only get 11 in credit, which blows. And then if you go down one more strike price, 401, 402, you get 20. You get double the amount of credit for one extra strike price. Okay. I think I might be able to get behind that. But I would want to close if it goes above $400.81. So we're going to create an alert with that drawing. That'll be our exit for the upside. So based on, the dollar rising this morning to where it was Friday, I think the markets are probably going to be hesitant to go up in this market. So decent opportunity for us. And this trade, I would probably say it's only worth like $400. So I'm only going to open 20 of these spreads. Your risk is going to be, $1,600, which is pretty sizable. But since we do have that stop loss set at like 401, that is going to save us from losing the full $1,600. But I'm going to open 20 at 19. Well, it looks like I could have got filled for 20, but that's okay. So I got $380 of credit in order to open that, and then I'm going to work on opening a iron condor for tomorrow. Actually, let me take a screenshot of the whole thing. Post that in the trade alerts for everybody. Oh, crapola. Come on now. Please work screenshots. One more time. There we go. Desktop. All right. New options alert. Okay. And then I'll tag everyone since we're all free this week. Just opened a new 401, 402 SPY call credit spread expiring today. 12.6 at 19 each. I ended up getting cheated on the price, but that's okay. And then formatting, yay. Cool. Dollar rising this morning, and markets should trade flat today with no econ data coming out unless we have war escalations or China lockdown news. We should be pretty steady or down with the dollar going up. So that's the analysis for it. Right now, SPY is trading at 398.58, so it's down probably about 0.1% since we opened. And again, planning to close that as long as, planning to close it if it goes back above $400.81. Currently, we're trading at 398.40, almost at the weekly lows, so we'll see how this goes. I think for right now, definitely a decent trade. And maybe we open that iron condor now. So let's see what strike prices we can pick out. Yeah, good right out of the gate. Yeah, I got kind of lucky on the timing for it. Usually my timing is pretty shit, but that one I guess was okay. So now let's open an iron condor for tomorrow because we don't have any big economic news. I would say we probably trade above last week's lows at like 393-ish. Maybe call it 392 if you want to be safe. But let's set up an iron condor for tomorrow. So this will be a swing trade. 397.99, so it's already in the 397s now. already dropping right off the bat. And that'll kind of help us get a little bit more credit for tomorrow's put credit spread side. Hopefully. Let's see. 393, 392 is actually paying a decent chunk of credit. That's 14 cents for a $1 spread. That by itself is actually pretty damn good, I would say. And then you add the call side of it. So going over to calls, I would say right now we're trading at 397. I think there's a decent chance we stay probably below 404. So that's 1, 2, 3, 4 strike prices above where we're trading right now. So we'll sell the 404 call, buy the 405. If you really want to be safe, sell the 405, buy the 404. That's $6 of credit versus, I think this is only 7 or 8. So actually, yeah, I think it makes more sense to sell the 405 instead of the 404. So sell the 405, buy the 406. You get an extra dollar of, upside room. Let me try the other one just to make sure we're doing the numbers right. Yeah, so this one pays 22 in credit, the other one's 20, so there's not much difference there. Yeah, it's only $2 extra. So this one is paying 20 cents per spread. This one, I would say I do have more confidence in it. I would probably say it's worth around 600 to 800. So we could open between 30 and 40 of these. I'm going to start with the low end at 30. And then, if SPY starts to drop, then we'll reposition probably. But going to open 30 spreads at 20 cents. So our risk, 2,400. We want to set up some price levels, obviously, so we don't end up getting murdered for this. So we're assuming that it'll be above, 394 on the put side, if I remember right? No, 393. Okay. So, as long as this stays probably above this price level here at like 395.20, we ought to be fine. Actually, we'll call it 396. So that would be the close on 11/28, roughly. So 396. If it goes below that, we want to get out of this trade. So create an alert at or below that 396 level. And then for the upside, probably want to call it 402.95. Crosses above that price level. So basically 403. Okay. All right, so it's still paying 20. We want to open 30 at 20, 600 in credit. Submit my order. Let me take the screenshot while I'm here, I guess. Oh, and of course I got filled lower than I should have, but actually I didn't get filled at all. Robinhood's like, nah, actually, we're not gonna fill you below the bid. How does that even make sense? How would I not get filled below the freaking bid? Come on, Robinhood, you're better than this. You've got to be kidding me. It's 2 cents below the bid and I'm not getting filled for that. That's absolutely ridiculous. These market makers are something else, man. I'll try to do it at 19. That's literally 3 cents below the bid. So if I don't get filled there, then don't know what's going on with Robinhood's market makers other than trying to steal people's money. How? How is it even possible that I'm not getting filled 3 cents below the bid? There's got to be like piss poor volume on it. That's the only thing that I can think of. But that's quite ridiculous in my opinion. I'll try to at the bid, see if that gets filled. If that doesn't happen, then I don't know what we're gonna do, honestly. Really wanted to open that trade though. You didn't get filled either with Webull. That's the best place to get filled with spreads from what I've seen in the Discord is E-Trade. So that's probably where I'm gonna switch to. I just got news that Robinhood isn't gonna give me my 4% cash interest. So I've been thinking about moving over to E-Trade. I know a couple people that use it, some people in the Discord that get really good fills. I know Josh from the trading fraternity uses E-Trade too. He's a big fan of spreads like I am. But Jesus Christ, like this is ridiculous. If I type it in for 18 and I don't get filled, like there is something messed up with this. Oh, my leg is asleep right now. Oh God. There we go. All right, so I got filled 30 at 540, so we got filled at 18. I feel like this is highway robbery, but it is what it is. New options alert. Everyone. Come on now, everyone. Just opened a new 393, 394. Let me double check the strike prices on it. Puts. Yeah, 390, 392, 393. And then the upper strike prices were 405, 406. 406 SPY IC expiring tomorrow, 12/7 at 18 cents a piece. No econ data coming out today. We do have some econ data coming out tomorrow, non-farm productivity, but I don't think it's going to have much weight. Non-farm productivity dropping tomorrow at 8:30 a.m., but I don't think it will have much impact on the markets. If it does, I'll end up closing if SPY goes below 396 or above 402.95, I think. Yeah, 402.95. So that's the Iron Condor for us. Try to find a few other trades. I want to look at earnings. Aries filled you at 19. Yeah. Why do I stick with Robinhood? Because it's the platform that I'm used to, I guess. Old habits die hard. I know that I'm losing, probably at least a few dollars per spread option. And then transferring the money from one place to another is also a pain in the ass. Like if you want to transfer, like say $10,000, and it's going to take you like 5 days to reach your bank and then another 5 days to reach your other brokerage. So it's just not an easy process to switch from one broker to another. I really wish that they had some sort of system to where you could just like move your cash from one broker to another. That would be ideal, but IKBR, if you trade larger volumes, commission doesn't matter, and fills are very good. Yeah, I've heard good things about IKBR. Tastyworks, I think I want to say that they have pretty similar market makers to Robinhood. You do pay a $1 commission, so you're probably going to get a little bit of a better fill. But I don't think that Tastyworks has as good of market makers as Fidelity has some of the best fills, and then again E-Trade. Those two are probably hands down the best places to get the best prices for options. You will pay a 65-cent commission for each time that you open, or each option that you open, and then 65 cents whenever you close that same option. So you do end up paying $1.30 in commissions for each option that you open and close. But usually you will end up getting like $1 better fill if you're using like Robinhood. That's not going to charge you any commission, right? So in the end, you end up actually saving around 70 cents per option that you open and close. So, yeah, again, I probably want to switch over to E-Trade. I tried Fidelity. Fidelity, I don't love the user interface of, for one. And then two, they didn't approve me for level 3 options trading. Kind of explain my situation in that, I have this YouTube channel that literally teaches people how to trade spreads, but they didn't like it. It wasn't good enough for them. So, yeah, let's see. Market's pulling back, 397. Yeah, so the odds of going back up to that 401 strike price, pretty low at this point. The credit spreads we got are going for 10 cents a piece. I would say there's probably like I want to say 5-6% chance of this trade going south for us. So I'm going to try to close them at 5 or 6 cents a piece. Right now they're going for 10. So still another, $4 or $5 to make on each spread. But obviously you're taking on a much higher risk reward ratio, a much higher risk for the trade. But yeah, everything going pretty smoothly this morning. The Iron Condor's not so smooth, I guess. With SPY coming down to 397. Again, we want to close if it goes below 396. I'd say there's a half decent chance that actually does happen today. But hopefully the markets can put off that price for another day. Would be nice. We'll see. We shall see. Surprised UVIXI isn't going up right now. UVIXI is actually down 1%, 725 at the moment. VIX itself is up by 0.87. We're seeing a bit of discrepancy between what VIX and UVIXI should be trading at. Whenever VIX moves, UVIXI should mimic VIX and then multiply what it does by 1.5%. So with VIX up 0.9% today, that means that UVIXI should be up 1.4%, but it's actually down today 1%, which is very strange, but it happens. I've seen it happen a lot more recently, but yeah, I do have I bought another 100 shares of UVIXI yesterday, so we'll talk about that trade in a minute. I think Tastyworks, there's no commission at closing. Yes, so you pay whenever you open $1, then close, you don't have to pay anything. It's because of the mustache, yeah. They just want to take my mustache gains away. How did yesterday's call credit spread work out on SPY? Yeah, let's talk about yesterday's trades. Let's see. I think, hopefully, I updated the spreadsheet, but let me double check. Sometimes I'll do it at the end of the day. Sometimes I'll forget because I had 3 meetings yesterday. But, yeah, so I did end up, I had a put debit spread that I opened. I didn't type in the call credit spread. So let me pull up the info for that on my phone, and then I'll input the trade. So let me look at new options alert here. And I need to actually fix the little calendar that I have too. But Just opened a new put debit spread. That's today. Actually, that's yesterday. No, that's... Okay. Yeah, so I had a 404, 405 call credit spread. I opened at 13 cents a piece. So let's type in all the data we need. 12.5 is when I opened it. I closed it the same day, 12.5. This is one that I ended up closing myself. So yeah, the status is closed. SPY, this is a call credit spread, which is a bearish / neutral rating. And the expiration date was actually 12/9. Interesting. Did I type in the expiration date wrong? Yes, I did. 12/5 is the expiration. I ended up going long for the 405 strike price. Whoopsies. Back to here. I look better without the mustache. Well, it's growing back in if you can't already tell. I'm going to have it right back. I just messed up whenever I was trimming it, so gonna grow it back. 405 for the long though. 404 for the short. Expiration date, we already have that. We opened 25 of these spreads, 13 credited entry, and those, the ones that I closed yesterday, I think I closed them at like 5 cents a piece, if I remember right. Call credit spread. Yeah, so I ended up closing that at 5 each. So that trade I ended up making $200. Let me check if I have any others that I haven't updated. New options. Whoops, I cannot spell for shit. New options alert. All right, so I think I opened 3 trades yesterday, but let me check. Yeah. Oh yeah, I opened a put debit spread at the end of the day, I think. So that's the one that I'm missing right now. And then the GME trade that I opened too. That one I haven't closed yet. But let me type in the GME trade first. I already have the SPY call credit spread. Wait a minute. I think I opened multiple call credit spreads, so this is going to take me a while to fill out. So I'll probably do it after the stream. But I opened 2 call credit spreads. The one that I opened at the 406, 407 strike price, we'll go through closing options alerts. We'll just look at it on the Discord. That'll be a lot easier than me having to input the data. Cut losses on the SPY 401. So I ended up losing on the put credit spread. That one I ended up taking a $200 loss. I opened them at 29 a piece, and no, I opened them at 21 a piece, closed them at 29. So since I got a credit of 21 to open and then debited 29 to close, since the debit was greater, I ended up taking a $200 loss. Took profits on the 406, 407 SPY call credit spread. Closed those at 6 a piece. I opened 25, originally at 9 cents. So that was just, $75 profit. Nothing major there. And then I opened a put debit spread at 11 a.m. I opened just 8 of them. I didn't want to spend a lot of money on them, but I opened them for I think 38 cents a piece, if I remember right. Let me see. I closed them at 55, and then I opened them at put debit spread. I opened them for 43 each. So 55 minus 43, 12 times 8. Nice little $96 of profit. Nothing, again, major, but yeah, it was a profitable day overall. Today's looking to be about the same. We are coming down to that 396 price level that I'm worried about for the iron condors, but that is helping with our call credit spreads. We're up 260. Now these are going for 6 a piece. I told y'all that I wanted to close these at 5 to 6. So we might just get our wish. The bid is 6, so you're not going to get filled right away, but I am going to put in the limit order to close them at 6. Let me drink some water. Yeah, so I'm going to close these at 6 cents a piece. I opened them at 19. So 13 times 20, $260 profit for that trade. Oh, dehydration. This is what happens when you have so much caffeine in the morning. Let's see. Look up the wheel strategy on YouTube. There's tons of videos. Yeah. Wheel strategy. I wouldn't be too into the wheel strategy right now just because of the cash that you need in order to use it. I'm a big fan of having liquidity right now. So I'd rather have the cash than be spending the money on buying stocks. But that's also biased towards, being bearish on the stock market. So, you're listening to a bear. So, might not want to base your trades off of what I'm saying, depending on how you feel about the market. Obviously, you could be bearish, you could be bullish. But given that the rates are going up and they're going to continue to go up probably over the next 6 to 12 months, we're probably going to go lower for the stock market because financial conditions, whenever rates are going up, are only going to get tighter, right? Like that, the money supply is going to shrink because people can't borrow as much money at higher rates. So that means that people aren't going to have as much discretionary income in order to buy stocks. So not going to be as much demand for stocks, which means that they're probably going to come down in price. So again, hesitant on the wheel strategy. I'm more of a fan of just using spread options. That way I don't have to deal with owning the shares themselves. Like if I lose on the trade, then I just end up taking my max loss. I'd rather have that than, either buying or selling 100 shares of a company. That being said, I do have some stocks in my portfolio. Let me see if I can pull those up. I think I have like 35 shares of Tesla on my Fidelity account. Oh, we ended up getting filled for the SPY call credit spread at 6 cents a piece. Sweet. Let me post that in the trade alerts. SPY just went below 396. Great. That means we have to get out of the Iron Condor. Not fun. We made money just to lose it. Closing options alerts. Premium. Everyone. Just to profit on the 401, 402 SPY call credit spread expiring today, 12/6 at 6 each. SPY call credit. Dun dun dun. Where the heck is it? SPY 401, 402 maybe. There it is. Nope. I know I posted the damn alert. Where the hell is it? There it is. Open at 19 each, yeah. Opened at 19 each. Close them at 6. 19 minus 6 is 13. We opened 28 spreads, 260 profit. Nice little money in the bag, but then we're going to lose our money seemingly on the Iron Condors. And it's just about the same amount of loss that I took in profits. That's okay. So it actually looks like SPY bounced on the 396 level for right now. we could either hedge the position and say that SPY will go below 396. Right now, we'll probably pay around 55 cents for each spread that we open. So there's not a lot of the risk reward ratio is not as great, but that could be a way that we make some money back if SPY does end up continuing to come down today. So you would buy the 397, sell the 396 that expires today. And again, like I said, you're paying like 54 cents. So that means you can make about 45 cents with each spread that you open. This one, I wouldn't put a lot of money down on it, just because I'm not confident in the trade. But let's see. This one, I would probably put down $400 or so. So 400 over 54, I would end up buying 7 spreads at 54 cents a piece, which means that my max profit for this trade would be 322. Let's open them for 55, I guess, is what they want for it. So we're spending a little bit extra. Let me scroll down here so I can take a proper screenshot of what we buy and sell. Post that in the trade alert. So this is going to be a hedge, basically, against the Iron Condor. New options alerts. This is a day trade. Tag everyone with it. Everyone. Just opened a new 396, 397 SPY put debit spread expiring today, 12/6 at 54 cents each. Let's see, 385 over 7. 55 each. Let me bold this. SPY dropping this morning. Let's check the dollar. I think that's probably the reason why, but we'll double check. There's no other news coming out. But yeah, the dollar is making its way back up to Friday's highs, with dollar making its way up to Friday's highs. Using this as a hedge against my IC expiring tomorrow. For if SPY continues to come down below the 396 strike price, basically. We bought them at 55 apiece. If SPY goes down to that 396 level, again, these would be worth around 60 cents. This one, I would kind of say it's hard to tell what is a % chance of this trade working out. So I'm hesitant to give like a closing price for it. Maybe we can work that out later, but just wondering how many trades do you have / recommend open at one time. I usually only have between 2 and 3 short-term trades. So between like 2 to 3 day expiration dates. And then I do have, some more long-term positions, such as, let's see, the SPY put debit spread that expires next week. I would still consider that a shorter time frame position. But then I do have, let's see, another one. That one I opened a while ago. But right now I have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 positions open. And let's see, 1, 2, 3, 4 of those 10 are long-term thinking. So January 2023 for this spread. I opened this a very, very long time ago. The gold I opened like 3 months ago. So this is a Leaps call. This one I also opened, I think, during the bull market whenever I thought every stock would go up. So hence why, I'm down 860 for this, 775 for that one. And then I do have a Bank of America Leaps put option with a $37 strike price. That one I'm probably going to hold. And then the gold call, probably going to hold both of those. So about 10 positions, usually 2 or 3 like short time frames, like less than 1 week until expiration. But that's the way that I like to trade. Maybe, you have more attention span than I do. Why do you use put debit spread instead of a call debit or a call credit spread for your bearish sentiment? So with a put debit spread, it's kind of like buying a regular put option, right? So you're bearish in your assumption for a put debit spread. You want to start with an out of the money strike price. And then obviously you want that strike price to go in the money if you're doing a debit spread, because that's when you make your max profit, when both of the options are in the money, right? So, I opened the put debit spread assuming that SPY would go below that 396 mark. It was trading at 396.50-ish whenever I opened it. So that means that 396 strike price that I want it to be below is out of the money. So I actually made a video, and I'll link it here in the chat for you to watch whenever you get time. But let's see. Content. Credit versus debit spread. So I opened this, or I posted this just a couple weeks ago. Should be very useful though. What is the advantage or disadvantage? So it's basically all about the risk reward ratio and the leverage that you get out of the trade. So if you're doing a put debit spread, usually you're gonna end up, actually I will say usually you're going to end up with the same risk reward ratio whether you're doing a put debit spread or a call credit spread. The difference is if the option is in the money or out of the money, because if the options are in the money, you have the chance of getting assigned for those options, so early assignment. And if you get assigned early for a spread option, you have to exercise the long option that you bought, and your broker is going to bar you from trading for the rest of the day because your account is going to be placed in a deficit until the option that you bought ends up getting exercised, which doesn't happen until midnight the same day. So basically, like, you can't trade for the rest of the day. So you want to start with an out of money strike price, and with a debit spread, you want it to swing in the money. Is it true that your percent chance of profit is better with credit spreads? Yes. If you're doing an out of money credit spread. Okay, so let me take you through a little example. All right, so I'm going to put this in its basic form. So we're going to do a call credit spread on SPY. Okay, so let's say that we think SPY somehow is going to fall to $394 at the end of today. All right, so we would end up selling the 394 strike price that we want it to be below, and then buying the 395 strike price. So right now SPY is trading at 396.27. All right, so with this trade, it's already trading above the strike price that we want. Whereas if we moved our strike prices to say that it would be above or below 398, which is already trading below, so we'd sell the 398, buy the 399, it's more likely that it's going to stay below the price that it's already below than to be below a price that it's not yet below. I know that's kind of sounds weird. I don't know really how to rephrase that, but basically it's more likely that a stock is going to be below a price that it's already below, and less likely that it would fall below a specific price. Because I mean I don't really know how well to explain that, but yeah, your percent chance of profit for an out of the money credit spread is going to be higher, essentially. And really, I guess you could say just the higher your strike price in general for a call credit spread, the more likely that it's going to be below that price. So like, I could open a 440 call credit spread expiring today, and the odds of that would be like pretty much 100%, right? Like, what are the odds that SPY goes up 10% in a day? Extremely low. What are the odds that it goes up 1% in a day? Not as low. So if I did, say, a 400 strike price, there's a greater chance of it going above that $400 strike price than that $440 strike price. Hopefully that makes more sense. A good on the SPY puts. Yeah, SPY puts are doing pretty hot. The put debit spreads that I got, I think they ought to be doing pretty well too. They're going for 55 cents a piece. I want to close them at 60. So still a ways that it needs to go in order to reach that. Looks like SPY is bouncing a little bit off that 396 level. So we might need to get out of the put debit spread that we got. And I would say we probably close if it goes above either the 396.97 mark or the halfway point between 396.97 and 399.02. 396.97. Multiply that by half, and you get 397.99. So basically 398 price level. But hopefully we end up. Hopefully for the put debit spreads that we have open, we go below the 396 strike price. But for the iron condors, don't really want that. But they are a hedge against one another. Let's zoom into the 5-minute time frame. Lost a quick 300 for Lucid this week. Yeah, Lucid is a special one. Let's see. I don't see use of any Greeks for your trades. Is this usually the case or just for day trading? No, I don't usually stick to Greeks, and the reason why I mostly avoid using Greeks is because they're always changing with the strike or with the stock price, right? So for every $1 that SPY goes up, your options value is going to change by the delta. And like the markets are always moving. So whenever you take a Greek value, that is just kind of a snapshot in time of what that option should be valued at, right? So say there's a 30 delta for a short put that I want to open. That means based on the delta value, there's roughly a 30% chance of that option staying, sorry, a 70% chance of it staying out of the money and a 30% chance of it going in the money. But that is only a snapshot of that specific time in the market. So you can't really use the Greeks as a reliable source in order to open your trades, because they're always going to be shifting as the market shifts with it, right? So I don't use Greeks. I used to be very reliant on them, but more recently I've been using what I call like mental statistics. So like setting my own probability of this trade working out or not, basically. And that's not really for everybody. Like, you have to have experience in order to do it. Like, I've been trading options for 3 years now, so I've gained the experience to get a decent estimate of a trade working out or not. And that's something that you'll kind of learn over time without having to. And then that way you won't have to use the Greeks anymore, basically. But let's see. Got it. That's good. Yeah, SPY is just kind of balancing above that 396 price level. Again, I want to probably close if it goes above 396.97. That would probably confirm that the downtrend is over. So at or above 396.97, we'll create it with the price level. Hopefully it doesn't get there too quickly. But yeah, that's probably all the trades that I'll make for today. Not really much going on besides oil's actually coming down to 76 a barrel, so that's interesting given the price cap set on Russian oil. You would think with the lower supply coming out of Russia that oil prices would actually go up, but they've actually come down since that news ended up coming out a few days ago. They were trading at like 80 a barrel, I think. 82 a barrel. They ended up sinking all the way down to 77. Now it's 75, interesting enough. But yeah, that's oil. The VIX is up 2% today, so that's actually some decent moves that we're seeing out of VIX. UVIXY is still lagging behind at basically break even, which sucks given that I have 300 shares of UVIXY. But hopefully, my assumption is that volatility is going to go up next week for the Fed meeting, so still got time for that. But yeah, I think I'm done trading for today, and I will catch y'all tomorrow. Aaron asked, what about IV, implied volatility? So IV, I would say, is a very important metric, and basically all that IV is supply and demand for any given option. So if implied volatility is very high, that means that buyers expect it to make a very large move, which means that more people are going to be buying that because, you know, people buy it because they want to make money, right? So whenever IV is high, you're going to be paying more for an option because more people are buying that option. Whereas if IV is low, that means there's not a lot of demand for the option. That means that you're going to be paying a lower price for it. So that's basically all IV is supply and demand. And that's, you know, what moves prices of everything from options to oil to the dollar. Like, it's all based on supply and demand. A bull put spread below 395. You could do that. That would be a decent idea. Let's see, SPY. Although we are already trading pretty close to it, and the trend definitely seems down today. There's no big news that's coming out that's sending the markets down that I know of. So, I mean, it might be in just an overreaction to the dollar going up. Very possible. But I would be more hesitant on that 395. Just given how close we are to it, I would probably play it safer and say that it'll be above like 394 or like 393 is what I would be comfortable with, since we're already trading at 396 basically. But let's see the news. We'll end this with the news. Major leader Chuck Schumer says a lot of negotiating left to do to get year-long government funding bill done. Gotta love the government taking their sweet time. 396.25 seems to be a good point of control. The volume is concentrated there. Yeah, I mean, that's just because we've balanced there for a good while. Looks like we're pulling back a little bit below it. We're about to hit that 396 level again. So maybe I hold off and stick with the live session a little bit longer so we can close that put debit spread if we go below that 396 level. All right, we're at 395.85. So probably going to close the Iron Condor and going to close those put debit spreads while we're at it. We're only up 28 for the put debit spreads right now. Let's wait a little bit longer for confirmation. $395.89. That should be a confirmation since it's like 15 cents below, but sometimes you'll get a bounce like immediately after. So we'll wait just a couple more minutes, see what plays out. The Iron Condor obviously not doing great. Let's see. So I opened 30, so maybe we reduce our risk since I'm less confident for this trade now instead of just cutting losses overall. So how much am I okay with losing for this spread is going to be the question now. So they're going for 27 cents a piece, so about $70 of risk per spread that we keep open. I would probably say willing to risk like 300, honestly, so not a lot. So let's see, 300 over 70, we keep open like 4 or 5 spreads, so I will close 25 of these and keep the other 5 just in case we do end up staying above the 393 level. But for right now, let's get out, take our losses since it went below that 396 level that we called for. Hopefully it fills the damn order. It's always the hardest part of getting filled, especially for Iron Condors. 25 at 29. Oh, come on now. There we go. 25. Oh, God. The price just went up to 30. Come on now. Yeah, looks like we're going to have to close them at 30. Oh, gotta love Robinhood. 0.3. There we go. So we're out of those at 30. We ended up opening them at, I think, 20-ish. Yeah, 18 cents a piece, so 12 times 25. We ended up taking a $300 loss. Still keeping open 5 of them. So let's see. And then keeping open the put debit spreads that we have. Closing options alert. Premium. Oh, wait. Need to tag everybody. Just cut losses on the SPY. 393, 392, 393 to 405, 406. IC expiring tomorrow 12/7 at 30 each. $25 of 30. Keeping 5 spreads open, but SPY went below 406 price target, so decided to reduce exposure. Looks like SPY is still catching a balance on that 396 level though. But let's see. We're up 28 so far for the SPY put debit spreads. If this trade goes according to plan, there's another 7 times 40, $280 to make out of it. So I think I'm going to end up keeping it open. Seems like the trend is down today. Maybe we close now if it goes above 396.41 price level. And yeah, that's it for today, and I will catch y'all tomorrow at the same time at 9:30 in the morning. We'll make a cross above, and then I'll get a text alert if it does, and then I will close it over on the Discord for everybody. So, yeah. See y'all tomorrow morning, everybody. Bye.